weekend free access to the replay videos, so you can review some of the sessions again. Now I can see Alpesh is in the room, so if I unmute you, Alpesh, good evening. Are you there?
I am indeed.
Oh, wonderful, wonderful.
I always give you a heart attack.
Well, you're just there. It's just becoming predictable now. But so thank you very much.
I was going to stay quiet for a while, actually.
I beg your pardon?
I was going to stay quiet for a little while.
Oh, well, there we are. There'll be plenty of other opportunities, I assure you. we've had a couple of technical mishaps today. One or two of the speakers have had sound issues, but largely gone very smoothly, I'm pleased to say. And we've had some really fantastic presentations. From some new speakers that we haven't heard before, some new ideas, some new approaching to value investing. I particularly enjoyed Tom Howard, who was joining us from Denver, from the Athena Invest Fund. Very interesting speaker. So it's been a tremendous day, and we've also got quite a lot of new people listening in, and we're welcoming them to the round-the-clock investor for the first time. Alpesh, for those of you who haven't been on this event before, Alpesh has spoken several times. Alpesh and I go back too many years now, I think, really, for us to confess. But it's always good to have your input on the markets, and of course, you like to give us an update of just an insight into what sort of stocks that you're looking at, which ones you might not be so interested in the different sectors, because of course we're at such an interesting point in the markets right now with the near record highs for the FTSE, elections, all sorts of geopolitical movements going on. So what's hot and what's not seems an appropriate time for your presentation.
Good. And I guess we've just got to work out how I put my screen on.
Well, I will do that as if by magic. I will cross over to you now, if you're ready for me to put the presentation onto your computer.
I've just got to make sure it goes on the right screen. I've actually got 4 in front of me, so I've got to make sure you can see my right screen.
We can see. You just need to duplicate the display settings so that it enlarges the presentation.
Not that one. That one, I think.
No, it's gone now.
Can you see what's hot and what's not?
Oh, yes. That's super. Okay, and can I ask everybody at home as well if you could just acknowledge that you can hear Alpesh and I rambling away, and both of us are coming through loud and clear. That's super. Great. We have sound and vision, everything we need. So, super. Alpesh, it's just gone 7 o'clock. I'll hand over to you, Alpesh B.Patel, investingbetter.com. What's hot and what's not?
Right away, because there is so much that I need to cover. I highly recommend you have a pen and paper ready, maybe even a drink because it's 7 p.m. And what I'm going to do is run through what's hot and what's not only in foreign exchange, but in the indices and in stocks and in strategy. So we've got, as I say, a heck of a lot to cover, and I hope it's going to be the most value-packed hour of your whole 10 hours so far. So let me move to the very first slide. I'm going to start off with foreign exchange. Now, with every security that I'm going to talk about, whether it's Forex, whether it's indices, or whether it's stocks, I'm going to give you a bit of background why I think you should listen to my views and why there's some credibility and credence to my views. And so I'll give you the background to begin with. With foreign exchange, I've been doing it, as you can imagine, I'm sure like all the other speakers, for a very long time. However, I'd like to think very successfully compared to many people. This is the winning ratio, 78% correct over the last 12 months. We're actually going to create a day-by-day diary, actually, because we've been so successful on this, and publish it as a book. We currently offer all of our trades for free to people to follow through the newsletter, but this is how accurate it is, and then I'm going to tell you what my views on the market are at the moment. And this is a breakdown. Every single month was positive and was profitable. So that's the background as to why I think I've got something valuable to tell you on Forex. What do I have to tell you on Forex? And it is this. First, hot trade as I see it. Look, I think sterling euro, it's a bit of a no-brainer to go at least to 1.5 because that's where, and slightly even above that, is where recent resistance was. You can see it there, and you can see for those who follow the MACD, and I do. I'm not going to go into detail about this particular momentum indicator on this evening's presentation because we don't have the time to do that, but it's been a trusty friend for over 25 years, as long as Simon's been a friend, you see, and because that's pushing upwards, I see the direction and a one-way bet for now. Now, that's not to say intraday that you might get pullbacks, but the bias that we're holding at the moment on this GBP Euro, and as I said, we're 78% of the time our trades are spot on correct. This is one of our hottest trades at the moment. By the way, if you want it also completely for free, get whatever I'm thinking on the markets, and I send a heck of a lot of tweets out at Alpesh BP is where to follow me on that. Let's move on to the next one. This is moderately hot. It's not fumingly hot. It's not inferno-like hot, but moderately hot. Cable, sterling dollar. Look, it's hit a base, okay, and I think there is continued weakness, but there's mixed signals. It's bouncing off that base. It's probably not going to go below it, but equally, I'm not seeing the likelihood of some massive rally in the other direction either. So it's moderately hot in the sense that there's a nice little trend. What's going to happen is it's going to do this, go up a bit, down a bit. So the reason I say moderately hot is we love nice little trends, nice little swings, which are easy without too much volatility because they're a lot easier to monitor. Now, what we tend to do is trade everything from 1-minute charts on our iPads because we want to be on the move. We're not always going to be on the screen, all the way up to 1 hour, 4-hour charts. Now, the 4-hour charts, when you're looking at those, a lot of people don't understand this, but the positions you're going to be holding will probably be for a few days if it's a 4-hour chart where each bar represents 4 hours. If it's a 1-minute chart, you're probably going to be in and out within an hour. So you don't need to be stuck in front of the computer all day long. If you've only got a bit of time in the evening, you might look to trade off the 1-minute charts. Now, what's the relevance of a chart like this, which are 1-month bars, to trading 1 minute? Well, actually, not very much. The reason I'm showing you this is to show you which way we're biased on sterling cable, and at the moment we think it's just going to continue producing nice little swings, both upwards and downwards, without too much volatility, relatively easy to take money off the table. Like I said, not a hot trade like the previous one, and not a hot trade like the next one, which is euro dollar. For us, this is hot because we continue being short on it, and we continue going southwards on it. I wanted to pick the three sort of major currencies: sterling, euro, dollar. I've left out the yen, I've left out the Canadian dollar, the Swissy, obviously, for all those who have still haven't got, have still got some money left after trading on Swissies. And the reason these three is the most heavily traded. This one is hot for us. It's still a one-way bet. Now, some of you are going to turn around and say, well, wait a minute, aren't we going to get some kind of a pullback? Yeah, we'll get a pullback when we get a pullback. At the moment, this is our bias. This is the way we see it going. We didn't actually expect it to break below this level. We didn't care that it did, and I'll show you some of the hot strategies that we use to make sure that we are not trading our opinion. We're actually trading the market's view, and we let the market get us into a given trade or a given position, and how we do that later on in the webinar. For now, what I wanted to give you is just what our views are, and like I said, you saw from our news, 78% of the time we are absolutely spot on correct. And by the way, the times that we're wrong, we don't lose that much. We make a heck of a lot more when we're right. So I wanted to give you the top trades as we look at them right now. As some of you will know, I run an asset management company, so we actually end up having to do this for real with other people's money. And there's nothing which focuses your mind than when you're running other people's money. This is what we're telling our clients at the moment, is our view on euro dollar for now. And I said our key factor here is the MACD and the momentum downwards. But with something like this, when we get a break below resistance, we just let the market get us in. We'll place an entry order to go short when we got that break. And do you know what? the trading stop has not kicked in. Where do you place trade stops? How do you place entry orders? I'll tell you that in a second as we progress the webinar when I talk on the hot strategies section. So this was the hot Forex part. What about hot indices? This is actually going to be more interesting. Before we move, for a lot of people, because they're index traders, before we move on to hot stocks. Okay, so hot indices. What's happening on the indices? Like I said to you a moment ago, I want to give you the credentials before I give you my views, because otherwise you're just listening to another person. What are my credentials on this? Well, FTSE 100, the FTSE 100 prediction contest that the Financial Times held, I was rated the top forecaster, ranked #1 amongst all the people that they had listed, came within 0.5% of predicting that value over a 12-month period. So having established my credentials, what's my view as to what's going to happen with the global indices this year? Let me show you something which is probably the most important chart you're going to see. This is by Robert Shiller of Yale University. Since 1871, U.S. equities have never risen 7 consecutive years in a row. Have never risen 7 consecutive years in a row. Number of consecutive years of positive returns on the S&P 500. Just have a look at that a second. It's quite a chart, and you'll see that back in 1904 they'd risen 6 consecutive years, and then they 18% correction the year after. Were 5-year moves are relatively frequent. 6 years only happened twice in the last 30 odd years, 139 odd years, whereas that's the point we're at. Are we going to get a 7? Are we going to have a record yet? Are we going to break all-time records when it comes to the S&P 500? People, I don't think so. I don't think so, because I look at this chart. So if you want to know what's hot, well, actually what's too hot is the S&P 500. Friends, I think it's just a little bit too hot this year. I'll come to the FTSE 100 in a second, because that's a different story. But for the S&P 500 this year, I really don't want to say we're going to have a record-breaking year. Whoever wants to bet on an all-time record. The other thing about being too hot, don't get burnt. A lot of you will want to know, hey, okay, fine, not that index, but what's going to be the top performer? This is the best performing asset classes over the last 10 years. Over the last 10 years, if you can find a pattern to say to me, you know what, Alpesh, most of the time you should bet on one thing. I know gold is up there quite a lot, right near the top as the best performing asset class, but very often it's not. Some of you might say, oh, you know what, we'll pick the ones which have been the worst performing last year, and maybe they'll be best performing this year. Again, doesn't often work out as a pattern for you either. It looks random because it often is. Just wanted to give you a little bit of a warning. By the way, the place I get all of this, as an asset manager, the investment banks, the likes of Goldman's, Rothschilds, and so on, they give us a lot of data, a lot of information. What I'd like to do is distill this down for my readers, my viewers, so that they've got the best information available that we're looking at as asset managers, but sort of democratize investing by making sure that you get access to it as well, because the investment banks don't tend to give it to us retail investors. They give it to asset managers, and I like to think of myself as the bridge between the two. Charts like this is what they give their clients just to let them know, look, don't try and pick asset classes at the moment. So where does this leave us then? Where does it leave us for the year ahead when it comes to indices and the S&P 500? Well, this is what some are saying based on options. Now, I'm not going to go into the detail on options trading. Some are saying that based on options, implied volatilities, and so on, they're actually expecting relatively wide range, as you can see, and some of the targets that you can see that the street, and by the street we mean Wall Street, is fixing for the S&P still suggest they're factoring in an up year. Well, they would say that, wouldn't they? But if you look at these cones, you can see that very often, based on these implied vols, of course, the market tends to remain within those cones of probability during that year. But like I said earlier, is it going to be an up year? No, I think it's probably going to be closer to being somewhere in this area, down here. That's where I think the market is going to close. For the American markets, like I said, I'm going to come to the UK markets in a second. One of the things which gives me a lot of benefit, a lot of confidence with the UK market is consumer sentiment is at the highest it's been since the credit crunch. And I think this is why the UK is going to decouple from the US this year. This is why I think it's going to be good news for us this year, despite again, some news on the US side that the economic expansions just don't happen to run this long. The average tends to be 58 months. Well, guess what? We're at a 58-month period, so we're at the average. We can have an economic expansion without having the stock market hit a record year. And I think that's what's going to happen in the US. The economy will continue growing, which is good news, and which is what will help us in the UK, because we'll take our lead from the US economy. But I do not think that the US market will end up having an up year. I think the UK market will, however, because we didn't have a great year last year. Let me put it in a slightly different way, to what the Wall Street Journal has written there. Let me put it in this way, which is time from the market bottom to the peak has tended to be about 3.8 years, and guess what? We've exceeded that now. We're well beyond it. It's just a different way of putting the same information I've kept on giving you. This one is bottom to peak. You could argue, well, actually, Alpesh, from bottom to peak, why can't we do what we did in the 1990s and go on for about 9 years? We could. From bottom to peak, we can just continue upwards. But another record year doesn't look on the cards. And the reason the way it's been going up and up and up all this time is because earnings have been exceeding expectations. Earnings have been exceeding expectations because our expectations have been so battered. If you ask the average person, because their standard of living hasn't increased, they will say to you, well, I think we're still in a recession, feels like it. But corporate profits just keep on, therefore, beating down expectations, and therefore, when that happens, markets move up, and that's exactly why the S&P has been rising, except this year, I think. Now I think our expectations have caught up. We've got wise. After 6 years, you'd think we would get wise and raise our expectations. So that's the American market. Well, is it hot or not for the FTSE 100? Let me tell you what's going to happen with the FTSE 100. There is nowhere we're going to have some crazy rally up until the point of the election. About a week, 2 weeks before the election, once the polls start making it clear that we're not going to have a change of government, then we'll start getting a bit of a rally. And we'll have rally because of this, of that having coming to fruition in May, because we'll have some certainty. Okay, so I think that's the point at which we'll break 7,000. But up until that point, you're just going to keep on hitting that mark. You're going to keep on hitting it and trading around it. So it's not necessarily a great market at the moment, but equally it's not a bad one. It's going to get better once we get certainty around the election. As we start approaching this area now, once the campaigning starts on March the 30th, 31st, and throughout April, it's going to start getting, it's going to start being a little bit indecisive up until the polls start predicting things at the end of April more clearly, and then you'll get a move up. And that's what we're thinking. But I'm going to come to hot strategies in a second, because we need to put that into practice. We need to actually know how do we make money out of those views. What is it we do, which will give us a perspective that we can trade off, and that's what I'll talk about in the section after the next one. And the next section is stocks. What's hot at the moment, and again, why should you listen to my views when it comes to stocks? Once we discuss stocks and what's hot, and why I'm accurate, and why I think you should listen to me, then I'll talk about hot strategies where we implement some of these views that I've mentioned. So, like I said, keep a pen and paper ready, and get your questions ready as we come to the Q&A section after the stock section and after the hot strategies section. So, why should you listen to my views on stocks? What is it that I think might possibly make us capital on this area? Well, let me tell you. First of all, I invented trading software. Trading software, well, okay, you might say, so what? What does that matter? I invented ShareScope's Alpesh B.Patel Special Edition. Let me tell you why. It's been darn good, at delivering impressive results year in, year out, and had some great congratulatory comments as well from the likes of CEO of Barclays and head of JP Morgan Private Bank as well. So Alpesh B.Patel Special Edition absolutely outperformed, smashed the market, not just outperformed it, so not just the market. This is why you should listen to me as well, I think. Absolutely smashed Warren Buffett's 10-year record, which has only been 89% up, whereas my software has been up 351%. So that's why I think you should listen to me on stocks. And what are my views on stocks? This is what I do on stocks. And the stocks I'm going to give you. I look for where value stocks meet income stocks, meet growth stocks. I don't just want to give you value stocks, because low value stocks can remain undervalued for a very long period of time. There's no point just giving you undervalued stocks. They could be undervalued for a good reason. I also want income stocks because the big funds tend to pick income stocks. They need to. So they bid up the prices. They keep the price from hitting rock bottom. But that's not good enough, because an undervalued stock generating income might not go anywhere in terms of capital appreciation. So I want them to have growth, revenue growth, earnings growth. So then I look for those. And then I look for the very few stocks that match all three. And I get my data, my big data and my software to go through it, drill through it, and find me the best of the best names. Now let me tell you something. Funds out there don't do this. The reason funds don't do that is they'd rather sell you 3 products than sell you 1. I mean, after all, if printer manufacturers get away with it, they won't make 3-in-1 printers, faxes, and copier machines. They just make 1 of each, so you've got to buy 3 things. But funds don't do this yet. Maybe I should set up a separate fund to the one I have at the moment, which starts doing this. But until I do, you've got the software to do it. Again, it's part of that whole democratization thing. You don't need to give money to an expensive fat fund manager getting 2% for delivering you pathetic performance if somebody just gives you a piece of software and you can do it for a few £100 a year instead. And that's why I created this. So what are the stocks that I like? What are the stocks at the moment which, using all this data, using the theory behind it, which has smashed Warren Buffett's performance and every other UK fund manager over the last decade and the index, what are the stocks right at the moment based upon that, which I think are the hottest? Well, these are them, and I put these up. I just did the data after today's market close. So it has an Alpesh overall rating, a screen grab from the software from ShareScope's Alpesh B.Patel Special Edition. And you can see the value growth rating. So I try and rank these on a scoring basis as well, out of 10, so 9 out of 10. These are the FTSE 350 ones. I picked the top 12 based on the overall rating and the value growth rating, and these are the names, okay, from the 350 largest companies. Now, these are ones which I tend to have a positive view on for the next 12 months. It's a 12-month period that I look at them on. And I cheat. Well, the way I cheat is I'll go onto my software, I'll click overall rating, and these are the ones I'll start with. So I won't go through every single stock. Who wants to waste their time doing that? And I won't read Investors Chronicle or Shares Magazine or all the rest of it on a Sunday when I could be playing with my nieces, nephews, whatever. Instead, I'll go on the software. This is my starting point. This is what I recommend is your starting point if you're looking at a longer-term portfolio. Okay, like I said, I'm going to come to strategies in a moment, strategies you can apply to Forex trading indices in a moment. But for stocks, this is it. If you want to know more about how this is done and learn about value growth, go to sharescope.co.uk/Alpesh. Well, these are UK stocks. What about American ones? These are the American ones that I grabbed off the Dow Industrials, the top 30. So I've screen grabbed 27 there, and you can see right at the top, you might think a bit unusually, Home Depot and Walt Disney. And actually some of the ones I would have expected to be higher up, not so much. I would have thought GE would have been right up there, Intel, given just the technological growth we're seeing around the world. But at the moment, Home Depot, and I've just come back from Washington. I'm going to San Francisco next week, and I always make a point of visiting Home Depot just to see, you know, have they still got that edge? Are they still doing things the right way? I'm not going to work down those companies and tell you, yeah, I wear my Nikes while I go on a Boeing plane to Walt Disneyland. But Home Depot, because it's right up there at the top, I will go and visit. I'll also go and visit Walmart. For those who are US inclined, and looking not at just following the index for the reasons I said, that I don't think the index is going to have a stellar year. You want to pick individual US securities to add. This is it. Now, I said to you earlier, I said, you know, we get a lot of institutional information from the likes of Goldman Sachs, Rothschilds, Barclays, which is given to asset management companies such as our own. Let me give you what Goldman's have said for 2015 of their predictions in the major asset classes. And I've highlighted in yellow their top trades. So you want to know what's hot and what's not? Well, this is the first 8 of their recommended top trades for 2015. This is not something they will send everybody, and these are one of the benefits that you know, these webinars and following me on Twitter has, is that I'll give you free access to all of this. Again, part of that democratizing trading, so you're not stuck with fund managers fleecing you. Look at this, euro dollar downside. Look, they're doing it. They even tell you how they're going to do it through a 1-year euro dollar put spread. Don't worry so much about that. Most of you aren't going to be options traders, but euro dollar they're seeing to the downside. Okay, I'm going to stay away from the more complicated trades. Trade number 3, long December 2015 Euro Stocks 50 bull call spread, i.e. they're long European equities. Now I told you I'm long UK equities, so they see that this disjunction, that decoupling with the US, but they don't see it affecting Europe because, as I said, economic expansion can occur despite the markets, the stock markets not hitting all-time highs. Okay, trade number 5, long an equity basket of emerging market crude oil importers. Importers, why? Well, because the price of crude has gone down and they expect it to stay down. Therefore, importers such as India, Turkey, and Taiwan, they see their stocks and their markets benefiting. Well, I got back from India just last week, and I can tell you there is that benefit feeding into the markets, and the Indian markets are hitting all-time highs. So how do you trade those? Well, you can do it through an exchange-traded fund is one, or the Sensex index, which some of your brokers, and I'll show you the broker that I use in a moment, offer. Then there's short trades. And here you've got Swissy and the Swedish krona. They're short that. You might think somewhat perverse, given what the Swiss governments are prone to do, but they go short. I want to give you that. Finally, long US dollar against a basket of the Hungarian florin and the South African rand. Okay, again, that might be a bit esoteric for some of you, but the reason I wanted to give you this, the top trade recommendations of Goldman Sachs, is because you might think, well, yeah, Alpesh, you're great, but what about Goldman's? Okay, now, I said the other thing I'm going to give you, not just the hot indices, the hot Forex, and the hot stocks, but the hot strategies. And I want to just toe dip you into this right now. The hot strategies with some cold execution. Okay, and the reason for this is, what I've given you up to now, in a way you can think of as fish, and you can eat those fish. Well, what about going forward? What about after these webinars end? What about the education? What about the training? You're investing your time. You want this 1 hour to be invested to last a lifetime, hopefully. So let me give you some slides, which I think are some of the best I've got at the moment to teach you. It's training which will last a lifetime and make you a better trader and a better investor. The first one I want to show you is this, and it's the performance results of a friend of mine who runs a hedge fund. He used to be global head of foreign exchange at Salomon Brothers. His name's Bill Lipschutz. I'm Bill Lipschutz from my first book, My Trader, back in 1997 when I was young. And these are the distribution of his monthly returns. The reason I want to show you this is what a professional trader's returns look like. You'll see the number of months when they have losses. Quite a few months when they have losses, quite a few months when they have wins, of course. Let me tell you what you want to notice from all of this. 2 critical factors. They don't just win all the time just because they're professional hedge fund managers. So if you've suffered losses, don't worry about it. These are the best in the world. Our hedge fund like this as well. Anybody's does. George Soros, everyone. In other words, we have losing months. That's fine. The other 2 things beyond that, actually, I want to show you. I want to highlight to you and give you an insight into what it takes to be one of the best in the world, and I hope every single one of you listening to this intends to be the best at trading and investing, and I want to narrow down your education by giving you insights from institutions such as this, so that you get stuff you just can't get anywhere and blow your socks off. 2 other things. When I lift off the lid to hedge funds and their performance distributions like this, is this. First of all, notice how there are months with a few wins on the far right-hand corner. You've got to work out, and the strategy I'm going to show you do this in a second, how do you get months with a few big wins? That's what the best in the world do, okay? And the other thing is, notice how on the left-hand side there are no big losses. There's no losses. There's no big losses, okay? This is empty, whereas this has big wins, and there are lots of losing months. So there's three things for you to observe. Lots of losing months, no big losing months, and some big winning months. How do we replicate that? Because I tell you what the biggest mistake private investors make, and I guarantee you every single one of you who is on the webinar at the moment has done this. You'll have had the opposite of this. You'll have had lots of big losing months and very few or no big winning months. That's how it is. For most people, that's how it is. And we've got to switch that around. So I'm going to show you some hot strategies, because every strategy should be able to get this kind of performance and result for you. Every strategy should be able to do that. This is what a professional's performance figures look like in percentage terms. Big losses, none. Small losses, yeah, loads. Small wins, loads, and a few big wins. Of course they'd only like to have big wins. Of course they'd only like to have wins. Life isn't like that. That's even for the best hedge funds. And remember that I just showed you the performance results of a man who was global head of Salomon Brothers, foreign exchange markets, and he worked under Warren Buffett when Warren Buffett was chairman of Salomon Brothers. And I met Bill and we went through it. He taught me some of the strategies which I now adopt in my newsletter that I showed you and also in my own funds. So what are the strategies? How do we do this? What are the hot strategies? Three key things I'm going to teach you now. Okay? The first thing that hot traders do is to make sure there's asymmetric risk. In other words, risk is one-sided. Okay, they do asymmetric risk. What does that mean? Let me explain what asymmetric risk in all trading does. Once you start looking at things like this, you are on the road to being a better trader and a better investor. That's what I want for you. That's the purpose of what I'm about to teach you. This is taking the best information from the institutions, from my own trading, from my asset management company, from everything that I know and giving it to you in a condensed manner. Let me tell you what asymmetric risk means, and this is what the best do, the best in the world do. Remember, if you're right 50% of the time in your trading, then you're pretty much a coin, okay? If you're right 100% of the time, you're God. Nobody's going to be right 10 times out of 10. Nobody's going to be right even 8 or 9 times out of 10. You're aiming to be right 6 to 7 times out of 10. I know our newsletters right 78% of the time, so it's close to 8 times out of 10, but we're not at 8, okay? We're not at 8. So we're going to look to be right 6 to 7 times out of 10. How do we make sure we're right 6 to 7 times out of 10? We make sure our trades are asymmetric. They're one-sided. What does that mean? Well, let me show you with breakouts what it means. Okay, let me show you with breakouts what it means. So you've got a downward trend like this. Okay, the market's been moving down, 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 down. Okay, all it's been doing is going lower and lower. Let me just get the pen. It's been going lower and lower and lower. Okay, and then it had a breakout at point 2. Okay, when we see a downward trend like that, whether it's a 1-minute chart, whether it's foreign exchange or stocks, as in this case, whatever it is, when we see that breakout at point 2, then we think to ourselves a couple of things. We think, how do we make this an asymmetric risk trade? How do we make sure our reward is greater than our risk? That's what asymmetric risk means. How do we know that from point 2 it can get to point 4? So we say to ourselves, well, what was its recent levels? Hey, point 4 looks reasonable. That's a reward level. Then we say, well, how do we know when we're going to be wrong? Well, it shouldn't go back below the downward dotted trend line, i.e. it shouldn't go to point 3 if we're wrong. Asymmetric risk is where our reward is greater than our risk. In this case, the distance from 2 to 4 is greater than the distance from 2 to 3. That's asymmetric risk. We think the upside is better than the downside. Therefore, we think we've got asymmetric risk. We think we've got a trade in our favor. We think if we win, we'll win more than if we lose. That's what the best traders in the world do. They look at trades in that way. They don't just say, oh, there's a breakout, let me go long. That doesn't help you. It's what an amateur does. To take it to A level, take it to university level, to the master's, to PhD level of trading, you need to understand asymmetry. You need to say, right, is it likely to go to 4, which is a recent high? Yes, it is, because it was a recent high, level 4. And it should not go back underneath. Now, guess what private investors do when they look at this? They say, oh, I think it'll go up, so I'll go long, but I'm willing to hold it no matter what, even if it falls. And no matter how far it falls, I'll make it into a long-term trade. That's what private investors do. That's when they have big losing months, because the trade just keeps on losing, 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 so they have big losing months. They have negative months. Private investors do the exact opposite to professionals. Professional will get out, he'll release the capital and then reinvest it, because capital can be reinvested into something useful. Yeah? And that's incredibly, incredibly important. We are looking at asymmetric risk. One-sided. I want the trade to be in my favor. I want to be greedy. I want to be like a lion in the jungle, which doesn't go after the fastest gazelle, but goes after the slowest, weakest, pathetic one, because I want to be assured of the kill. I want to make the money on that trade with the lowest risk. And the way to do that is I want to know very quickly when I'm wrong and when I should get out, so I'm risking very little money. A bit like poker, I'm going to risk very little to find out if I'm wrong, but I want to be in a trade where when it's broken out, that means there's momentum in one direction, there's an area it can go to. I want to be doing those kinds of trades. I'm not going to be taking positions right, left, and center in the hopes some are going to make money, because I want to be winning. I want to be having big winning months. And I'll do a lot of these, and guess what will happen? Most of them will be just small wins, because they won't reach level 4. They'll only move up a little bit. And some of them will be small losses. But here's the beauty. Here's the beauty. Remember that previous chart I showed you. You do what I said, okay, and occasionally you're going to get the big wins out of it, but you'll never get the big losses. And the rest will be small losses and small wins. But you have a chart like that, and you're on your road to running a billion-dollar hedge fund, because that's exactly what Bill does, and we're certainly on our way to doing it as well, because it's just about, like any business, and make no mistake, trading is a business for entrepreneurs. Like any business, it's about getting a process and then just repeating that winning process over and over and over again until it's mind-numbingly boring. You know, there's a reason why people say Forex traders are the most stupid people in the world, because they just do the same thing over and over and over again. It helps if you haven't got a brain. Okay? Hot strategy number 2, or point number 2, I need to make to you some of the best information I've got that I can give to you in a short space of time, and it is this: how to be 100% correct. Okay? I'm being sarcastic right now. How to be 100% correct? Don't ever exit losing trades. That's not a good idea, but that's what private investors do. They have their losing trades, they just keep them open, a bit like an iceberg. They'll exit their winning ones and say, hey, guess what? I make loads of money. Oh, yeah? And what about your losing trades? Oh, yeah, well, they're just long-term investments. And they pour more money in so the capital doesn't get used up. Absolute nonsense. Absolutely crazy. Absolutely crazy. Okay? Why to love small losses? This is the reason. This is the reason why you should cut those losses. This is the reason. Because if you lose 5%, it takes 5.3% to recover. If you lose 25%, you've got to make 33% with the remainder of your money to recover. Guess what? Losing 25% doesn't mean you've got to make 25%. Losing 25% means you've got 25% less money. So with the less money, you've got to make 33% to get back to 100. I.e., if you go from up to 75, 33% of 75 is 25. Added to 75 brings you back to 100. Do you see how if you lose a little, you've got to make a lot? That's why you cut your losses quickly. That's why you put a point at point number 3 where you know you're going to be wrong very quickly and you get out. That's the only thing which will give you a chart like this. That's what will give you asymmetric risk and will make you a successful trader. The maths and the logic go from one thing to another. Right, point number 3 I'm going to give you. Hot point on strategies number 3, which is the most insightful, important thing I can tell you from institutions like ours that we do right, that private investors don't. This is worth gold, and it's this. It's variable position sizing, and you'll think, what the hell does that mean, Alpesh? You know, people say to me, where do I put my stop? What about trading stops? Where do they belong? Let me tell you. Let's say you entered where that green arrow is, okay? And you went long, and the price has moved along. And let's say you put a stop loss at this point, to call it 2 ATR. Let's say you put your stop loss. What variable position sizing means this? If the markets are more volatile and they're moving up and down more, and so you say to yourself, I'm going to move my stop loss a bit further out. What variable position sizing means is you reduce your position size. So the amount you would have lost if it hit 2 ATR is the same as the amount you'll lose if it hits 3 ATR. You see, what people come to me and say is, oh, I should put my stop loss further out and I've lost more money. And if I put it in closer so I lose less money, I get whipsawed out more often. Well, guess what? Reduce your position size and move it further out. And how do you know when to move it further out? You look at the volatility of the market. You look at something called average true range. That's what I look at. Or you can do what an experienced person does, which is you look at it by eye. My point is, if you move your stop loss further out, reduce your position size so you're not losing more money. That's the critical difference between winners and losers. Speaking of winners and losers, what is the difference? What is the difference in all my years of training, teaching, running an asset management company, and 18 books now on investing? And the reason there's 18 is because the other 17 sold well, or I haven't got it right yet. But winners and losers, what's the difference? The winners will add to winning positions. Okay, when a position is winning and it's going in their direction, they will add to it. They will add to it. What will losers do? They'll add to losing positions. Winners will exit losses very quickly. Losers will exit profits very quickly. Winners let their profits run. Losers let their losses run. Winners will risk 1 to 2% of their capital per trade. In other words, if they're wrong and they make a loss, they'll only lose 1% of their capital. Losers will lose a hell of a lot more than that. So let me talk about strategies then. Okay, I'm going to talk about the pullback strategy quickly. I know on time, Simon, we're a little bit short, so I'm going to go through this. Okay, look at the pullback strategy. Most times prices move in a particular area, the value area, and sometimes they move above and below it. The reason for that is human emotion. Okay, emotion moves in waves like this. So prices move in waves. Of course it does. Prices move a bit like springs. Or sometimes I like to say prices move a bit like waves. They move in waves. And you'll have noticed this. How do we make money out of this? What's hot strategies that we use? We use the pullback strategy. Okay? Then I'm going to give you 4 hot free giveaways after this strategy. 4 hot free giveaways. Okay? To extend your learning. So we use strategies such as this. When the market undershoots, we wait for a pullback. That's the point at which, and then an overshoot on the other end. That's when we know the odds are in our favor. We're going to make a killing because the odds are in our favor. When I gave you the hot trades earlier, this is how I determined it. When were the odds in our favor? So there was asymmetric risk. Okay. Now I can't go into all the details of where the exact stop losses and so on are. I've had to hint at it in this because we've only got an hour and we've got Q&A. But the way I'm going to give you more information, more education on our strategies, on what we think day in, day out, why we've won competitions in the EFT and we're accurate so much, is through our free hot giveaways. Okay, here's the first one, and that's £5,000. No, I'm not just going to wire it to your account. Log on here, inter.tradermind.com. That's the broker that I've been using. You've seen my adverts. And the reason for that is when you're trading pullbacks, you need brokers which give you the right orders. Trading entries, stop losses, which are accurate. So it took a while to find one which had won awards, but actually more importantly, they gave bonus money. And I like brokers who give bonus money. So that's the first free hot giveaway, inter.tradermind.com. It's not www. It's just http /inter.tradermind.com. Okay. Hot giveaway number 2. You want free Forex news? Well, you can have it. Go to investingbetter.com, sign up, and you'll get market commentary in your inbox every day based on what I've just told you. And it's probably the quickest and best way to learn. Hot free giveaway number 3. Want me to go into more detail about the MACD, stop losses, average true range, what we hedge fund managers do, alpeshb.patel.com. sign up, free videos. There's a whole load of training videos there for you. And finally, hot free giveaway number 3. You want to see slides like this where we go through breakout momentum, really easy to read stuff, go into more detail about what I've just shown you, and actually take you through trading examples like all of this, really clear stuff that I talk through and talk people through exactly where to stop, where the breakout is, where you went to short, and so on. But what I did is I created, because it takes time, created 8 hours and 85 lectures. For people who are watching this, you've got a 50% discount code, RTC March. Just go to udemy.com/trade FX for profit, and it's on there. There's 25 coupons for 50% off, first come, first serve. It's 30-day money-back guarantee. Heck, you can actually just go on there for 30 days and ask for your money back afterwards. See how generous I am. But the whole point with everything is what I want to get across to you, hours too short, but I want you to get an idea of the tip of the iceberg of what's important that you should know, and how do you then get on to know more. Simon, more than happy to take questions because there was a heck of a lot of information in there. Do you want to shoot, or shall I read them off the screen?
Alpesh. Well, Derek's asking a while back about financial and mining stocks. He says they've been out of fashion, so is now a good time to take a long position?
It's not a sector on the mining stocks that I look at in detail, and the reason for that is, as people will know, it's such a. I just don't feel there's asymmetric risk. Let me put it that way. I just don't ever think there's the advantages on my side. I know some of them. I used to trade penny shares. I know with some of them, of course, not all mining stocks are penny shares. Can go up significantly if they make finds. So it's not an area that I've been looking at recently. On the financial stuff, I go back to, let me just put my screen up. I go back to the stocks that I look at through my through ShareScope, and when I look at these, okay, have we got banking stocks right up there? Yeah, okay, we've got. I thought I just saw Lloyd's a second ago. There we go. Going blind in my old age. You know, and I look at that. Is it time to get back in? It's just a bit too early. You know, it's been going sideways for so long. Yeah, you made a good recovery, but then it's been sideways for. I would just say, where is the one-way bet? Where is the easy answer to me to say, yeah, absolutely. Go into Lloyd's, go into the banking stocks now. I just don't see it. I don't see at the moment that one-way bet on it. And if I don't get the one-way bet, then I don't want to do the hard trade. That's the way I look at it. And that's why I gave the names of some of the sort of the companies that I did earlier, and I said the ones that came up were things like, you know, surprisingly Burberry or ARM, you might say. How come ARM still comes up? Well, unlike Intel, that is still doing incredibly well. And we really like ARM at the moment, and we still continue liking Burberry because Burberry are selling like crazy in places like India and obviously still in the Far East as they get new wealth. And those are two of our favorites. And I'd say, why wouldn't you pick those when over finance stocks?
And what about Glencore, Derek's saying?
Yeah, let me just look up Glencore right there. It's the advantage of having these multiple screens. Okay, look, I'm going to put up Glencore on my screen right now for you. And it's a good question, actually, because, yeah, it's a mining stock, but it's obviously FTSE 100. Now, again, what you've got with Glencore is I've only got a value growth rating of 7. By the way, when I move over this, I always get my daily, I sort of get the daily comment, and that gets updated every single day. Okay, look, the price to earnings ratio is relatively low, so it could suggest it's undervalued. Growth turnover is up year on year, so that's positive. What worries me is the technicals. The price has not risen consistently in the past few weeks, so short term it doesn't have the momentum. That's the one negative at the moment with Glencore. You can see there I've got 3 positives, 4 positives, 1 negative. It's just that one negative. I want things which are going to be all positives up there, and that's what I like about, you know, looking at things straight away. I can do this.
Alpesh, Bill's asking about Skyworks. He said it would. Why wasn't it in your top 20 US stocks? He reckons it was one of the best ever from last year. Is that right now?
So I only had the Dow Jones 30 in there, and Skyworks isn't in the Dow. But hey, look, great plug for the stock. Let me just have a look right now for Skyworks. So what I wanted to do there, so it's NASDAQ stock, and what I wanted to do with that was to show you the Dow ones. Let me show you some of the NASDAQ ones. Okay, so I've got a value growth rating 8 on there. It's neutral on valuation, which you'd expect given, like he said, it's one of the best performers last year. But you know what? In terms of growth and technicals, it's right up there. So given that even after that massive rise last year, you got a value growth rating of 8 and a bullish momentum of A grade right up there. I don't have a problem with this one at all. In actual fact, while we're on the subject, let's look at the NASDAQ 100 and let's look at which ones are scoring highly on the overall rating. Well, you've got Comcast, you've got Apple still up there. I declare an interest. I am an Apple shareholder. It's thanks to Apple, actually. I got the hedge fund 10 years ago because we were long Apple. At that time, we were long BlackBerry, RIM, in other words. And I have to tell you, it was just crazy. It was just a one-way bet, and our clients were over the moon. So, look, despite what's happened with Apple just rising up and up and up, I look at this. I look at my value growth at 9. I look at my bullish momentum at A. I look at this. I've got one negative on the technicals in that we had a bit of a move down at the start of the year, but it seems to have recovered, and that's still a good one that I like. Any more for any more?
Any more questions? We've just got another minute or two, I think, and then we'll have to wrap up. Okay, I think just before we go, one or two people are asking about the 2-hour workshop on Tuesday night.
Yeah.
Just asking if you can sort of expand on what you'll include in that sort of 2-hour web workshop on Tuesday night. We've planned this to be a slightly more expansive session for a smaller group of people that you can actually get into some of the meat. 'Cause I know these presentations, although they're sort of very valuable, you're not given enough time to get into. So.
Exactly. Well, with that, what I'm going to go through, it's a good question, Simon. What I'm going to go through there is go into the detail of the strategies, lift the lid on the best strategies for trading which have worked, get into more details of the precise entry and exit points so that you've got, it's a more leisurely walk through, and it's devoted purely to Forex. What I've done tonight is obviously cover 3 asset classes and a whole load of other material. What that will do over those 2-hour period, and what I want to walk away with, is a lot more confidence amongst all the people who sign up in those 2 hours to see and get a flavor of what it is that we actually do and how they can replicate it so that their risks are limited, so they know when to get in, when to get out, how to run profits, how to cut losses, how to know where to put stop losses, how to know how much money to put into trade so they don't blow up, how to make sure that they've got a bias towards wins and running profits, and how they get that psychological satisfaction of knowing they've done the right thing, used their discipline, exited, haven't locked in their money, aren't sitting on a whole load of losses. So I want to get rid of all the negative stuff that they tend to do and give them, through actual specific strategies, what they should be doing. This is based on not just what won me awards in the Financial Times and also from my own asset management company. It is a combination of all of these things in one session. So I'd probably say, in terms of credentials, nobody better out there, if I say so myself. And in terms of content, you're going to get something from basically a hedge fund manager who was a retail client. And if there's anybody else out there, if you've got any other hedge fund managers who are teaching retail clients, I'd like to know about it. What I've tried to do, Simon, like anything I do, is try and make it the absolute best.
Well, I have no doubt.
Otherwise, I won't
just for those of you that are listening, if you do want to get a place on that sort of smaller workshop, it's Tuesday night, 10th of March, 6:30 to 8:30. It's $29.99, and as you're on around the clock, you can even take 25% off that by using the little link that I'm posting in the chat box now. It takes 25% off the cost of that. So we'd love you to join us again on Tuesday night for that workshop. Now, there are some more questions still coming in, but I'm afraid we're going to have to wrap it up there, and leave me to say thank you to Alpesh for joining us. You're somewhat of a regular fixture on the round-the-clock events, and I'm very pleased that you are, because you always bring a great sort of feel like we've been right around the world, and we've got a good idea of what's going on in all the markets. So Alpesh, thank you very much again. I'll take the presenter role back from you. And we'll just get ready for our next speaker, Jimmy Young, who I can see tomorrow by hopefully by the end of the afternoon at the latest. So I hope you enjoy watching the recordings. Okay, right. Many thanks. Good night. God bless. Speak to you again soon. Bye bye for now.